Do you happen to know why is it that you guys are to hit your goal of $1.5 billion asset under management? Why aren't you going all into multifamily? Some of the operators in our industry have gotten. What have you
Yep.
guys decided to not only go into other real estate assets, but you're going even outside of real estate?
No, that's a great question. Part of it is because conversations we've had with our investors is they want other things to invest in. They still love multifamily for the long-term wealth protection and accumulation, but I think anybody here that's invested in multifamily would agree that the bulk of multifamily deals are not cash flowing like they used to.
Correct.
And you have investors like me that are, we'll say, a little more chronologically gifted than others that are looking at things. We want stuff that cash flows because, as my good friend Mike Guthrie says, he goes, yeah, you can't eat net worth.
Yep, exactly. Yeah, that's for sure. Okay, so you guys going into different verticals. Part of that reasons is because that's what your investors are looking for. And that is definitely a strategy I see a number of sponsors do as well. So that they're like, okay, I want to be able to provide like a well-rounded portfolio for my investors so they don't have to go somewhere else. They can do all the
Exactly.
investments here with me. So let's talk about your investors, your LP investors. Who are they? Where, how did you begin to build your investor database as you became a GP and started raising capital?
Oh, wow. I probably started like a lot of people do, going to real estate meetups and handing out thousands of cards, 98% of which end up in the trash somewhere. And then I realized that it's not about just making that initial connection and realizing that most investors aren't investing initially in the deal. They're investing in you as an individual. And for them to do that, you've got to earn that trust. And just handing them a business card doesn't do that. So fast forward, I still go to real estate events. I almost never hand out my card anymore. I just start up conversations. And then if somebody asks me for contact information, I pull up my phone and, oops, I pull up my phone. You probably can't, it's fading in and out, but it's got my QR code on the front that takes them into my CRM, just like you do.
Gotcha. Okay.
And then from there, we continue the conversation. I don't
Right.
hammer them with what deal I've got going on. If they ask, I'll say, hey, we've got one that we're going to close on September 8th. We don't have room for any more investors right now, but we've got other deals in the pipeline. Happy to talk to you about the process if you want to learn more. I'm not a hard sales guy. We look at it. One of the things we look at craft is we want to have that trust relationship with our LPs. Gabe likes to use the term for transparency, accountant in a glass sphere. He wants that 360-degree visibility on everything that we're doing. So our books are open. Investors, if you're invested in one of our deals, if you haven't seen the books, that just means you haven't looked because we make all that stuff available.
It's good.
And now, do we give them the general ledger? No. We don't give them the rent roll because it takes time to go and sanitize all that because you've got your residents' names and phone numbers and stuff in there. Nobody wants that stuff floating out because that's a whole nother problem. But we give them the rent roll and the balance sheet and let them know, hey, here's everything that's going on. We do monthly reports. So it takes time. I was telling you about my friend Mike Guthrie. You've probably heard his story. His very first raise, I think he raised $4 million.
Yeah.
And everybody goes, oh, wow, first raise, $4 million. He goes, oh, yeah, it took him 28 years to get there because he was in business for 28 years doing his ATM business. And he had literally thousands of business owners in his phone as connections that he had already built trust with as a business owner. And all he had to
Right.
do was tap that and go, hey, I didn't have that. So I had to build mine more slowly. And I did it by just getting out, meeting people, making the connections. Some of them are people I used to work with. Some of them are people I've met at real estate events. Some of them are people I've met on LinkedIn. Some of them are referrals. I asked my CPA, I talked to him about what we do. And I said, hey, first I asked him, I said, are you open to me referring people to your business? And he goes, sure.
Of course.
After about 6 months, he asked me to stop because he'd run out of capacity.
Oh,
He had to add more people. Now, since then, he's turned it back on, so I can still refer to people to him now. And then in return, I didn't have to ask him for referrals. He just sent them to me. So
okay.
it goes back to that. And this is something you're really good at, which is giving value. You just offer value. Eventually, it comes back around.
Right.
Sometimes it's not as quick as we'd like, but it happens. You just have to give that value and provide value to people, even if you know they're never going to invest with you, because
Right.
they may never invest with you, but maybe they have a rich uncle that will. You don't know.
So from your various channels there, you talked about networking, you're talking about past coworkers, you're talking about LinkedIn, you're talking about CPA referrals. Is there like your one or two top channels that you like the most? Either A, because they're where you've gotten the most of your investors, or where your biggest investors came from.
I think some of the real estate events I've been to, I've gotten some pretty big investors from those because you'll have people that are out there that are looking at this. If they're looking at a syndication deal, they realize the value in that, but they also, especially if they're business owners, they also realize that that's another full-time job. And once they make that realization, they go, you know what? I don't want to be a GP myself, but I want to partner with somebody that's getting out there and doing it. And so I think for me, the real estate events are my top one just because that's where I've
Mm,
gotten some of my higher dollar investors. Our investors run the gamut. We've had people invest as little as 10K all the way up to, we've had a couple of people write $1 million check. I wished I had more of the $1 million check guys. Again, it's a process. We're growing it.
that's excellent. Wow. Okay. So your key to making the networking events work, like you mentioned, is meet them, get not just exchange business cards, but really get to know them at a deeper level, build that deeper relationship. And that's been what's working well for you in your capital raising. Is that correct?
Oh, absolutely. And just to be clear, I didn't start off that way. I was the spray and pray guy. I'd get out there throwing out business cards left and right. And then after I learned that activity is not a value add to me. Once I realized that, then I'm going, okay, it makes more sense to focus on things that do result in actual investor conversations.
It makes sense. Yeah, for sure. With all the deals, so how between LPs and GPs, how many deals do you think you're in right now currently?
If you count the one that's going to close on September 8th, probably 20, 21 maybe.
Okay, that's quite a bit. That's good. I don't know if you're much of an economics person, but do you have any sort of outlook on where the market's going?
Anytime somebody asks that, I always tell the story about my favorite economist, Dr. Ray Dotzauer. He's retired. But he used to be the chief economist at the Texas A&M Real Estate School. I got to hear him speak one time at the GREA conference, and he came out on stage and introduced himself and said, for those of you that don't know me, I'm Dr. Ray Dotzauer. I'm an economist. What that means is that 50% of everything I say is wrong. I knew right then I loved the guy because he was funny, He was very insightful. He went on to give a history of why we're at where we're at and what to expect. Anyway, I say all that to say I don't know. I do have a crystal ball. Unfortunately, it's full of mud. But my sense is that we're at the bottom of the market. I don't think we're going to bounce, meaning that it's going to go back up. I think we're going to have a slow, hard slug to climb back out of where we are and get back to a normal real estate market. And maybe we never get back to whatever. We may have a new normal. I don't know. But I get the feeling that whatever's going to happen over the next year to 18 months isn't going to happen quickly.
Hmm.
I could be wrong. I hope I'm wrong. I'm hoping it goes up like a skyrocket and then I can sell all my assets and then you won't see me except with like pictures like this in the background.